With last month's candle closing out bearish, we're going to be talking about the price action from a technical and structural perspective. We're also going to be reviewing the debt ceiling announcement, the upcoming news events such as CPI, PPI, and the Federal Reserve interest rate hike. Let's go ahead and get stuck into it. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day. In today's video, we're going to be focusing on the question, now that the monthly candle has closed, has the macro charts changed? What are the technical indicators and structural levels suggesting for the next move? And how can the upcoming news data influence and shift the price action? These are questions we'll be answering in today's video, so stick around until the end. Now, before we get into it, go ahead guys, show some support to the channel, smash the like button, hit the comment button, and subscribe. We do daily videos of Bitcoin focusing on the facts, the data, the technical information, the structural levels, and of course, the economy and news events. No emotion, no hype, pure raw TA, pure raw data. If that is the kind of content you're interested in, you can join our Telegram channel. That will be the second link down below. You'll get access to charts, updates, analysis, videos, educational posts, news events, and so much more guys to keep you going throughout the day. If you're interested in joining our VIP channel, you'll get access to exact entries, exact targets, exact stop losses for trade setups, for shorts and longs, for Bitcoin, Ethereum, and altcoin, such as this trade over here. You'll also get access to exclusive analysis and get access to our group chat. So you can see our group chats in here. We have a whole bunch of trading going on. We have a whole bunch of trading going on and analysis of all of our members in this channel. If you're interested in that, you can go ahead and contact me via the free channel. Go to the pinned comments, click up to the top. You can find all the information here. One more thing before we get into it, I do have a $10,000 giveaway going on pretty soon. As you know, we're coming up to 10,000 subs, and to show my appreciation, I want to give away something back to the audience. So we're doing $10,000 for 10,000 subs. To enter, go ahead and follow these steps over here. Really simple, and we'll be announcing the winner when we actually have the 10,000 subs. So let's get into a video, guys. We'll go ahead and start off the market data. How are we looking? Well, volume is down 38%. If you're confused where that is, it's a top hand over here, top left-hand corner. You can see volume is at 35 billion, down 38% for the 24-hour period. Nothing too unexpected. Sunday over here in Australia, Saturday in America, volume does traditionally drop over the weekend. So with dropping volume, we can see liquidations have also fallen down to 27 million, sitting at 23% in the red. Now, overall, these numbers are quite low, 35 billion and 27 million. It is quite low, and it is actually quite low for a weekend as well. So we are seeing some compression. It is representing consolidation. It's representing decreasing volatility and overall decreasing volume. This generally happens when we're in consolidation phases. And if we go ahead and look at the chart, we will see that we are very much, in fact, within a horizontal consolidation, which we'll discuss on the smaller time frame. For last month, we ended up closing close to 7% in the red, but the key level to close below for the bears was, in fact, not 30,000, but it was the opening price of the prior candle. So we actually did close out last month's candle bearish. As you can see, we closed below, we closed over here, and we closed below the opening price of the prior candle, representing a shift in direction. This represents a downtrend as initiated. We're now in a downtrend on the daily chart. We're currently in a downtrend over here, guys. We can see a potential macro reversal in play. This represents a shift in strength and thus a shift in momentum, because strength, again, strength of price action is a combination of volume, volatility, velocity, liquidity, speed, and more importantly, momentum. So if we do have momentum dropping, we know that the metrics that make up momentum are dropping, and therefore the strength of price action is also falling. And that is what this represents. It represents a shift from an uptrend into an initial beginning of a downtrend. Whether on the downtrend will continue is upon a lot of factors, which we'll discuss today in the short term and of course on the daily chart, but it is starting to occur. And we can see that this downtrend that we saw in the monthly, which has begun, has actually been going now for quite some time on the daily chart. You know, we started around April, we pushed May, and now we're in the start of June, and we've been in this downtrend ever since. So the question is, are we going to break through and upwards, or will this downtrend result in a continuation lower? And economic data is going to provide a good insight into what will occur, and we're discussing that in just one moment. Moving on to volatility, we can see for the 30-day volatility index, we are still pushing sideways. Again, dropping volatility, dropping volume, dropping liquidations, compression in price action, all expected. A big move is coming for Bitcoin, guys. When we see these compressions in volatility, we do see large moves coming. It's like a pressure cooker. It's building up pressure, and when we see that correction, when we see that crack above this downtrending resistance, and we have that shift in momentum, we see the price drop below this horizontal support and thus have that continuation in bearish momentum. The move that occurs after this break and above this break is going to be big. We're brewing quite a large move for the market. So a lot of this is going to be determined by the interest rates, by CPI, and of course the debt ceiling announcement, which are coming soon. So let's talk about the broader markets and then we'll get into Bitcoin. DXY has seen a little bit of a pullback. It did reach 104.5. Obviously, it got pulled back and it did bounce on the NFP data. Of course, NFP data coming in ridiculously bearish, guys, insanely bearish. We expected, according to the forecast of 193,000, we actually came in at 339,000. So about 140,000 jobs over expected, which represents excessive growth or, a very rapid growth. And this is generally indicative of rising inflation. Not only that, we saw unemployment rates actually increase. Again, guys, it's not really suggesting anything too healthy in here. If we look at the prior data for the month, we saw core CPI, core PCE went up 0.4%. We saw personal spending up 0.8%. We saw personal income up 0.4%. We saw unemployment rate go up, and we saw NFP go up. In the prior month, we actually saw CPI go up 0.4%. So all of the data we've had from last month and this month so far is actually suggesting inflation is back on the rise. And of course, if inflation is back on the rise, that ramps up the risk in the market and could potentially result in a extended period of rate hikes, or even, guys, a second wave of rate hikes if the inflation doesn't get under control. And if that happens, we will expect the DXY to rise. If DXY rises, asset prices fall. However, we do have an uptrending support line over here, guys. If the uptrending support line cracks, we can expect the DXY to fall back towards support, and that can push asset prices up. Here is the really interesting thing, guys. As you would know, inflation is back on the rise. We have the data that is not up for discussion. It's a fact. The data suggests that, whether it be leading data from employment rates, spending, savings, whether it be inflation data itself, month on month, job data, everything is suggesting inflation is back on the rise. And if we take a look at the upcoming news events, which of course is going to be inflation month on month, they are forecasting a drop in inflation, which would make absolutely no sense because all of the leading data suggests inflation is rising. So either they're painting a false narrative to allow themselves to go ahead and pass that debt bill, which will allow unlimited debt essentially until 2025, which is what we want. And again, they may say they're not going to spend more than they need to, but we know the government has a spending problem, so giving them access to unlimited debt is a very bad move because they're going to end up spending more. All that's going to do is drive up inflation even more, and guys, if inflation continues upwards, this could potentially result in a second wave of hikes, which will do nothing but drop your buying power, increase your spending, and decrease your available savings, and increase your debt service ratios. To me, it sounds like the cycle is repeating. Inflation is rising, they're going to ignore it, and then while inflation continues upwards, in 3 or 4 months, they're gonna say, inflation is back up, we're gonna start ramping interest rates back up. All they're doing is kicking the can down the road again, which is very interesting. If we go ahead and take a look at the CME data, 74% expect a rate pause. They expect a rate pause when inflation is going back up. Once again, what I expect to happen is inflation is going to rise again over the next few months. That is in relation to the current data we have. If that occurs, I do not expect them to take action. They didn't take action last time. They waited until it was too late. They're going to do exactly the same thing again, guys. They're going to wait until it's too late. Then they're going to start ramping interest rate hikes again. We're going to get a second wave if inflation doesn't get under control. The way out is to start increasing interest rates now, bring inflation back under control before it gets ahead of us again. The problem with that, guys, if they do that, the banks will start crumbling. So we're really stuck between a rock and a hard place over here. Whatever move they go, someone is going to suffer. And we all know they're not going to let the big companies and the banks suffer. They're going to push that suffering onto taxpayers. So what I expect is interest rates to stay at 25. I don't think we'll see a pause. If we see a pause, that will be absolutely wild to see, considering inflation is back on the rise. I do expect the markets to potentially have a more upside if that continues in the way they want it to. Anyway, let's go ahead, guys, and get into the stock market. We can see a rally toward the upside, retesting our liquidity zone over here. Nice strong rejection. expecting to see a rejection from this in the weeks to come. If we do break through here, we can see anything as high as an uptrending trend line, 4,450. But again, we do have an uptrending trend line here. If we do break down from an uptrending trend line, expect a strong correction. This is quite a large rising channel. We take a measured move from top to bottom, apply it across. We can see that correction, if we break down from the uptrending support line, could take us all the way back into this lower support range at 3,600. Dow Jones, guys, nice strong bounce from our uptrending support. Again, no weekly close below this trend line, which again represents this area is still support. If we close a weekly candle below here, expect move toward the downside. Until then, if we do break above here, we can expect a move upwards. Right now, we are in consolidation, we are in compression within the apex of this horizontal resistance and this uptrending support. Let's go ahead, guys, and get into Bitcoin, and we'll start off on the daily and short term and then discuss what is going on in the macro. But again, in today's video, the purpose of today is to talk about the macro charts, talk about what the technical indicators are suggesting, what our levels are suggesting, and what we expect now that the monthly candle is closed. But before we do that, we need to apply some context. So daily chart, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. We're currently in a weak downtrend. We can see the weak trend over here. The reason being is because we've rejected from the 30 to 28k level, and we've actually broken below 28k and pushed down. So ever since we lost the 28k level, we actually entered a weak bearish downtrend. The reason why this is a weak downtrend is because the angle of our downtrend is not very aggressive. It's quite a soft angle, so the downtrend is quite a soft downtrend. Additionally, the uptrend on the weekly is still intact. We have a bullish weekly uptrend, and therefore the daily bearish downtrend is kind of half negated by that, and thus we have a bit of a discrepancy between the weekly direction and the daily direction, and thus we are only in a weak bearish trend. The bearish trend will continue if we lose the bearish trigger and the structural bearish continuation trigger. The bearish trigger is a major support which is preventing the price from moving towards this lower support range, which you can see at 26,000. If we do break below 26,000, which is a structural bearish trigger, we can expect a move back to retest the weekly uptrend support of a weekly horizontal support, which spans ever since all the way back over here, August 2022, and of course retested again in February 2023. So if we retest this area, this is where the weekly uptrend is at threat. If we lose 24.4k to 25.2k, if we lose that level, the weekly uptrend is over and we are now in a bearish trend. You can see the red arrow starts from the breakdown of that point, entering a bearish trend. So right now we have a bearish daily trend, we have a bullish weekly trend, and that results in discrepancy and obviously results in a degree of compression. That is what we're seeing. We're seeing a weak bearish trend that is compressing, which is either going to result in a momentum shift upwards and validate the bullish weekly trend and push higher, or break below and continue lower. In these scenarios, there is absolutely no way to tell which way the price is going to go. You have to watch the trigger points, meaning you have to watch the points of which the probabilities shift. A lot of people say, oh, you're just saying up or down, whatever. No. Watch the price action, watch your triggers. These diagonal trend lines, these horizontal levels, these structural levels on the small time frame chart, they all represent resistances and supports, liquidity zones, but they also come with degrees of probability, meaning the probability of a continuation down while we remain underneath this downtrend is higher than a probability of a continuation upwards. Thus, when we break this downtrend or we push above it, the probability of a continuation upwards becomes higher than the probability downwards. Knowing that information, you can hedge more into long positions or swing longs when the price pushes above that level, as opposed to where you are now within a consolidation. Now, because we're in a consolidation with no clear higher time frame direction, you wouldn't want to be taking too many swing longs or swing shorts. You want to be scalp trading. When you break below this level, you can then flip to swing shorts. So yes, it is up and down, but nothing in life and nothing in trading is with certainty. Everything comes with a degree of probability. Your job as a trader is to identify probable directions, apply your probabilities and statistics and risk managements to those directions, and then obviously trade those directions with hopes of making profit. Nothing is certain, everything comes with risk, and that is why risk management is so important. So watch the key levels. If we look at the daily trend, how will the daily trend flip bullish? We need to see a break from the downtrend. So we see a break over the downtrend, and we see a break over our RSI trend line, which represents declining momentum, right? We've had declining momentum ever since here, which represents a bearish divergence. If we break above this trend line and we break above this trend line, we get a double confluence, a double point of confirmation. We're going to shift the momentum upwards. Remember, if momentum shifts upwards, it represents volume, volatility, speed, velocity, liquidity. All of our metrics of price action have turned positive, okay? If we look at our volatility index on the 60-day, that will have shot up. On the 30-day, that will also shoot up, and that will push the price action up, guys, on that chart. It can result in a continuation upwards. Until then, we are in a weak bearish trend. If we lose this trend line, we continue lower. Let's talk about the daily, let's talk about the smaller time frame chart, and then get into our weekly technical analysis. So similar thing occurring over here, guys. We need to talk about our ranges. We have some key levels. Obviously, we had deviation above and below. Right now, we are still very much in that horizontal consolidation range we've been in ever since the 12th of May. So we're coming up nearly on a whole month within this range, pushing sideways, compressing. This represents, of course, sideways compression. This, of course, is a neutral consolidation, meaning the directional continuation will be determined by the directional break. We've had deviation up, we've had deviation down. More likely now, the next correct move will be the directional move we take. However, knowing that, we have two key levels of resistance. We have, of course, our 28K and our downtrending resistance. And on support wise, we have our major support at 25.8 to 26,000, which of course, if we go back to the daily chart, you can see that is of course that daily structural trigger level as support, meaning a directional move upwards can take us towards this level here. A directional move from this level down can take us towards this level here. But even if that occurs, the higher time frame direction will not shift unless we break over our major support level, or break below our major support level, which can send us down to 25,000, or break above that downtrend resistance will flip the daily trend into a bullish uptrend. So moving back to these range levels, if you take a look at our arrows on the side, you can see the green arrow above this level represents a daily bullish and daily weekly bullish trend. If we push above from the downside up, okay, from downside up through the POC at 26,800, we're in a range. It will be a range bullish trend. Since we actually broke from the top side down, okay, we are in a range bearish trend because this is the overall downtrend right now. This is a downtrend, okay? If we lose our structural bearish trigger, which is going to be 26.5K, moving back to this chart is represented by this blue line, we actually enter a stronger downtrend into a bearish trend. If we lose this low level, we enter a bearish trend. If we lose this lower support, we enter a strong bearish weekly trend. So yes, there are many ways the price can go right now, but that is what it comes to these horizontal ranges. These horizontal ranges do not have the definitive moves. They don't have the confluence, and they definitely don't have the certainty that other structures do actually have. These ranges are neutral. They do have a nearly equal percentage probability for a break in either direction, and that is why when you're trading these ranges, trade for the short term, scalp trade, don't take massive hedges in either direction yet. Wait for those high time frame directional moves to occur, wait for those triggers to occur that will actually shift the probabilities in favor of a particular direction. So right now, on the immediate short term, let's dive into it, then we'll get into the macro. On the immediate short term, it doesn't look very good for Bitcoin, okay? what we can see the price action is underneath the POC level, which again represents the point of control, the highest area point of resistance. If we look at the price action here, we can see the momentum is on the way down. As per our market Cipher B, we have, of course, a bearish divergence here, decreasing momentum, and of course, right over here, rising price. So we had the price move toward the downside. We're currently retesting a chunk of support or our midline. If we do crack below $27,000, expect the price to move back down, potentially to retest these lows. We can see a gap in the VRPV right over here, which will provide a decent area of liquidity that sits right in this range over here. We can see multiple long wicks into that range, providing a base of support. We can see, as per the RSI again, that momentum is definitely on the way toward the downside. So on the short term, I definitely don't expect the price to move up. I actually am expecting the price to move down today. If we do, of course, lose 27,000, that will be the trigger for it. For the price to start moving up again, on the smaller time frame, we're going to need to see, let's take a look. We're going to need to see a break above this 27,200 to 27,400 level. And again, this is a massive gap in the VRP right over here. So we start to build up momentum, we start to build velocity and speed as we push above the POC level. So as we push above the POC level in a smaller time frame, velocity, speed, momentum will start to increase, and that gives us a nice shot at 27.4k. But again, 27.4k is going to be the trigger point for a range bullish move and a potential continuation higher. A very key rejection point at that level. Let's go ahead, guys, and get into the macro. So on the higher time frame, of course, we did get to close that candle out bearish. Moving on to the weekly charts, guys, we can see on the weekly chart, momentum, first and foremost, on the RSI, had that shift, that negative shift we've been talking about for quite some weeks. We saw the breakdown occur at 62 on the RSI. And for those of you who haven't seen this analysis, we'll go over it really quickly. The 62 on the RSI was a major historical shifting point for macro momentum. If we take a look at the 62 on the RSI and draw a trend line vertically, we can see the breakdown occurred right over here. Okay, ever since then, we've seen the price correct. In fact, we saw a correction of around 14%. If we go back in time historically and we see a breakdown from that same point on the RSI, we actually marked a top. From there, we saw a strong correction all the way down 75%. Moving on, a breakdown on the RSI right over here. Okay, we can see another rejection. So you can see historically how accurate this has actually been when it comes to predicting momentum shifts, because again, momentum is a derivative of price action, but more importantly, it's a leading indicator to what the metrics of price action are doing. So if we see strong shifts in momentum, it generally represents, whoa, something big occurred over here. This is a very important determining point for the next direction or the next move of Bitcoin, as a metrics of price action are now suggesting there's been a change, right? Momentum's changed, velocity change, speed has changed, liquidity change, volume change, all shifting downwards, which can drive the price down aggressively. Again, I can go back in time even more, guys. Every single time we see that shift, we actually move toward the downside. The next question is, how low do we generally go after we see these shifts? So let's take a look. If we take a look at the drawdown percentage on the moves, the largest, or should I say the smallest drawdown percentage we saw was around 20%, which was back over here in September, August 2020. Now, the one thing about the RSI is it doesn't tell you how low the price can go. It tells you the direction of which the price is likely to move. We have to use structural levels. So we zoom out, the lowest point we do expect the price to go as per this RSI shift will of course be 24.4 to 25.2. That of course is going to be the target, but to see that we need to lose this range low. Now all of this is still probable. The current probable direction is still down. What can shift that? Economic data. The economic data comes out bullish, meaning if they decide to pause rates, or they decide to suggest inflation has fallen, that could push the prices up. Would they manipulate the data to do that? Who knows? Maybe they have a narrative, because again, if they want to uncap that debt ceiling limit, they need to justify their decisions by data, and they can manipulate the data to suggest what the economy, to suggest inflation is actually falling, when all of the data we've just had isn't. Now, I've obviously got a background in economics. I've been tracking this data for a very long time. I can tell you right now, all of the data is suggesting inflation is rising. If they do not suggest, they do not show on CPI, that inflation has gone up or is positive for the month, I'm going to be incredibly surprised because everything is suggesting so. So we do see inflation has gone down month-on-month. That is going to be very shocking. I expect it to be up month-on-month, which is plus 0.1%, higher, potentially even plus 0.4%. But if we do see it in the negative, that of course is very bullish for the markets, but will be very, very shocking to see. Anyway, guys, let's go back to the higher time frames and discuss our last few indicators. So momentum shift has occurred. If we look at the momentum again over here on the MACD on the weekly chart, we can see that for the last few days or the last few weeks, we have had basically a dry out in momentum. We can see volume, momentum, velocity has been steadily dropping. This does suggest weakness. On the MACD, we can see that. On the market Cipher B, we can also see that. However, weekly momentum has not yet shifted negative. We do have positive weekly momentum still. If we do drop below over here, we can see a weekly shift. So again, we are about to see a weekly shift in momentum negative on the MACD. We've had that on the RSI. We've yet to have that over here on the market Cipher B. This represents weakness. This represents weakening uptrending momentum. We could potentially see the MACD actually shift negative. If we look historically, when the MACD shifts negative, we do generally continue downwards again around these same points. You can see in the chart over here as the RSI, it generally does result in a move toward the downside. So definitely keep that in mind, guys. The market is definitely on the edge of a cliff. I don't expect too much to happen in the next few days, but as we approach this economic data, I expect volatility, volume, velocity, momentum all to start picking up. I expect the market to get sporadic and I expect big moves to occur. And I think the next move we get is going to be a very, very important move, a very definitive move for the market. But so remember, guys, if we want to see the market go into a macro bullish uptrend again, we need to break above 30,000. While we remain under 30,000, we are only at risk of losing the weekly and extending the daily downtrend. That is it, okay? The only risk we have now is the weekly uptrend will be lost and the daily downtrend is excuse me, is going to become more aggressive. Anyway, guys, thanks for watching. I hope you enjoyed today's video. Sign up to the Crypto Academy. You can find all details in the pinned comment down below, and I'll see you guys in the next video.